You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming at you live from our scenic studios, I should say, really, studios in scenic Chicago. Actually, not that bad this time of year. You think January in Chicago, terrifying, but it was in the 50s yesterday, so not too bad over here in Chicago. Of course, you guys can always get us live every Friday, noon Central, 1 p.m. Eastern, via the old Mixlr, via podcast, wherever you get your favorite podcasts. Hopefully you've been checking out some of our new stuff, like the Crypto Rundown, which case that just hit your feed recently this week, so check it out. Our first new program in a while. Hopefully you guys like it. You have some feedback. We'd love to hear from you guys on new programming as well. You guys are quite literally the reason we do it, after all, so hit us up, questions, comments, insights, not just for the crypto show, but for all of our programs on the website, over on social media, all that good. So make sure you play along with our polls, too. We do, yes, indeed, we do like to hear from you guys. And if you listened to Option Block yesterday, you know we had the Greasy Meatball on the Rock Lobster in studio. It was a big day for them, and they had a big event last night. And so I think they're still recovering. So they're not going to be able to join us here today. Not me, though. I can rally from events like that, but pro that I am. But those guys need a little bit of extra help. I think the Rock Lobster actually has to head back to the hinterlands of Maine as well, so they got to get them schlepped off there. But thankfully, it's not just me holding down the fort on Volatility Views this week. Nope, we have an old friend actually coming back for the first time, I think, in a while on Vol Views, and the first time on the network in a while, too. Mr. AASH VYAS. Formerly, you knew him from his many appearances with Swan Global Investments over there on our Advisors Option program. Now holding down the fort over there at Tungsten Investment Funds in a little country you may have heard of called Germany. So he's getting a little bit more international flavor these days. Ash, welcome to Volatility Views, sir. It has been a long time.
It has been a while, Mark. Thank you for having me.
You are welcome, sir. If you can get a little closer to your mic there, I want to make sure we can hear you all the way from Germany. So tell us, you used to be mostly in a research role in your prior incarnation. What are you up to these days? Are you still researching volatility, or what are you doing over there for Tungsten?
No, at Swan, I was running their overlay group, which was more portfolio management. This is somewhat similar, but a little more closer to pure volatility trading. Tungsten is a multi-strat investment firm that has managed futures strategy, a risk parity strategy, and a volatility strategy, which I mainly focus on.
And what are the instruments of choice you use to trade that volatility? Are you doing straight up, S&P vol, S&P options? Are you using volatility products like a VIX? What are you trading on? What are you using day to day?
Yeah, well, the emphasis for me is U.S. Options that are exchange traded, so mainly index options. So basically VIX, SPX, and we do some. We're in Europe, so we do some European stuff too, like the Euro stocks options as well.
Well, we can get into all of the Euro stocks and the V stocks and all that stuff too. I'm curious for you, how is it like as well transitioning from more of a research role to more of the practical committing of capital role? Did you like that? Was that something you were looking forward to doing, or did that something that kind of just a happy accident?
No, I missed it. At Swan, it was more being a air traffic controller, because of the size of the firm and the kind of things that we were doing. This is back in more of a portfolio manager role, which pretty much I've been doing for most of my career, and so it's kind of like going back home. It's good.
Well, I'm glad you can make it on your end. We got a little bit of a weird hum coming in from you over there, all the way from Germany. I guess the connection from Germany here to Chicago is a little. If there's anything that's humming on your end, by all means, let's curtail that. We want our listeners to hear all of your pearls of wisdom as we keep on rolling right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where, surprise, surprise, we review the week that was from a volatility, and indeed still is, from a volatility trading and trending and all sorts of other perspectives out there. Coming into showtime now, I get a little bit past noon central here, and we're seeing the markets and volatility markets in particular relaxing a little bit today, even though we saw a bit of a sell-off earlier in the day in the broad indices as well. Vol coming out of the balloon a little bit. It's been a narrative of ours for a while that the VIX itself, the futures and others were kind of eerily flat, hovering around that 20 level. They seemed kind of locked there. They didn't really know. VIX itself was kind of almost saying, hey, it's a coin flip, whether we move north from here or we move southward. All the futures were kind of flat. It was a weird, eerie environment we found ourselves in where there wasn't a lot going on from a vol perspective and there wasn't a lot of movement in vol. Seeing a little bit of that changing a bit today as the vol's coming in a little bit again. We're seeing the VIX cash right around 18.5 right now, which is about over 4 handles lower than where we were this time last week. So the vol, at least on the VIX cash side, coming in a wee bit. Looking at the futures now, we're seeing that, there was a discount to the cash last week. The cash was kind of just vacillating all over the place a little bit to the upside. This week, there's a bit of a premium on the futures and but not a huge one, about not even 0.6 of a point there on that front Jan future to the cash. And you're talking about almost a full point on the Feb future to the cash. So a little bit of a premium out there. And then the rest of the term structure, though, is still kind of flat. It's still hovering on that 19.5 level all the way out to pretty much May and even June, and even July. So that mid portion of the curve is still somewhat eerily flat, I think you could say, which is always a bit of a strange scenario here. We'll have to get the boys from Typhon back on to talk about their mullets and Tulums, see what they're doing in the VIX futures land right now, because I got to imagine not too much, because this is such a flat structure. It doesn't really set itself up for trading the front portion of the curve or really the rear portion of the curve. It's kind of more a kind of wait and see environment. We're also seeing VVIX, our old friend, the volatility of VIX, rallying a little bit. It was kind of coming off the last couple of weeks down to about the low 80s, 81 or so. This week about 85 and a half, so about 4.5 handles higher than where it was last week. So VIX moving a little bit, VVIX getting a little bit more life, not surprising. It was starting to get, VVIX was getting somewhat low. You remember we talk about it on the show a lot, there's kind of a bit of a range for VVIX, and we start getting around that 75 level to the downside. Things are fairly tranquil, vol related. And we know that isn't the case from a volatility perspective, so VVIX needed to get a little bit more juice, and clearly that is coming into place right now. AASH, obviously, you're out there watching a lot of U.S. vol from Germany over there, so a lot's been popping off. What's been on your radar? What's been kind of lighting up your tape this week from a volatility perspective, sir?
It's been interesting. I think December, even though we had some volatility, from a VIX perspective, it seemed much more like a buyer's panic than a seller's panic. I mean, I guess the phrase I'd use is orderly chaos, if that makes sense, right? We never got over 40. And, if you think about the kind of realized S&P moves that we were having, when we've had volatility regime changes in the past couple of years, that was certainly not the case. So it almost seems more like it was a buyer's panic, if that makes sense to you, Mark.
But yeah, you're right. It has been kind of a weird environment. Before we even get any more, then this is kind of a weird environment. Things are somewhat eerily flat right now. Is this an environment where there are a lot of attractive setups for you, or are you kind of mostly kind of waiting and seeing right now with the vol fund over there?
No, I think there are attractive setups. But there are just, a lot of, I guess, for lack of eloquence, kind of weird things going on, right? I mean, if you look at the VIX curve, it's been in backwardization for a while, which generally you can't do for very long. And then you look at it right now, and I understand, we have multiple expiries and stuff being moved around, but it's in contango for Feb and March, and then it goes, back down. There's not kind of a kink in it, right? And I'm not sure what to attribute that to. I think, possibly because we do have a Fed meeting at the end of January. Now, no one expects anything to happen, but it is an option, right? An option has to have some value if there's still time left, right? So, that's interesting. As far as practical stuff, I think VIX puts have been hanging in there pretty well because it seemed, with all the movement that we've had, S&P skew reprices itself. They bring it right back in a couple hours, and it seems like, for that to happen, VIX puts have been, surprisingly resilient. But as far as the more interesting stuff, I think it's more in just, plain old SPX than VIX these days, because as you noted, even though we've had instances of movement, VIX, for whatever reason, hasn't been accelerating like it has in the past.
No, that's definitely the case. You mentioned the VIX futures over there. Do you trade those as well, and the VIX options? Or you mentioned before you're primarily kind of an S&P guy, or is that pretty much all S&P options for you?
No, the mandate's fairly broad. It's U.S. index volatility. So we do use futures, we do use options. I mean, the only things that we try to do is we try to stay exchange traded. So yes, VIX futures, VIX options, S&P futures and options, Euro stocks, futures and options are primarily our focus for my product.
And is there any real bias? Like predominantly want to be short vol? Is you kind of go with the flow, go with the setups, as it will?
Yeah, it's not quite go with the flow as much as we try to return a profile of riskless plus 3 to 5%. Now riskless in Europe is kind of low, right? Because European interest rates are still pretty low. And other than that, we try to have some convexity whenever possible. That's sometimes that's more possible than not, but it's more of a relative value volatility product.
Well, speaking of vol products, we saw VIX options trading a little bit today. Not perhaps might as much as you might think, but a somewhat active day. We saw coming into showtime shy of 250,000, about 215,000 contracts on the tape so far, with the ADV where this coming into today right around 584, which is pretty much unched from a week ago. So we haven't seen this. People have been commenting on this before. We haven't seen VIX options really lighting things on fire. Usually this type of environment, we'd see the ADV well north of the 600,000 level, and yet we're shy of that and have been for some time and kind of keep hovering at that level. So VIX options continue to maybe, I wouldn't say underperform, but maybe slightly underwhelm given all the things we have going on out there. In terms of what's lighting it up for people right now, what are the hot VIX options out there, the big open positions in VIX land right now? Let's see, let's start from the bottom just for fun, the top 10. Number 10, we've got, looks like it's pretty much a call palooza this week. AASH, there's not many puts to be found here. Number 10, the April 37 halves coming in with 140,000. Number 9, the Feb 35s here, about 145,000. Number 8, the April 70s. We're talking about those last week as well. An interesting strike selection there. 153,000 contracts open there. Number 7. Our first and only put on the top 10 here, the Jan 18 puts, 156,000 contracts again. Maybe if we continue on this trajectory, those could potentially come into us. So we only have about 5 days left. So maybe might be a bit of a horse race on those bad boys to see that come to fruition. But crazier things have happened. I said that future's right around 1920 right now. It's got a little bit of a ways to go, but crazier things have happened over the course of 5 days or so. We see a nice handshake in the trade war. Those puts can certainly become pretty juicy. Number 6, the April 45s, 165,000 contracts open there. Number 5, the Jan 32 halves, $1.70 open over there. And then we go up over 200,000 for the Feb 40s, 210,000 to be exact for number 4. Jan 35s, just a call palooza here. Jan 35s, 213,000 contracts. Number 2, the Jan 30s, that 30 strike. I said it before, I'll say it again, always popular, remains popular out there. Doesn't matter what the month is, people like to load up on 30s. That is still the case right now. Nearly 250,000 of those bad boys open. And the number 1 open position right now in VIX options, the Feb 37 halves with about 327,000 contracts open there. Ash, does any of that come as a bit of a surprise to you that we're seeing this call palooza out there for open contracts here? There's not a lot of puts. In fact, I'm looking at the top 20 right now. There's some puts around number 20, Jan 20 puts, Jan 19 puts, about 116,000 open each, and the 15s and 16s are about 130,000 contracts open, but not a ton of put paper open. Does that surprise you? People maybe aren't fading this the way they usually would, or is that kind of what you expect?
It doesn't surprise me for a couple of reasons. I guess the cynic in me might say that VIX tends to work every other crisis or every other vol event. It didn't really work that well in December, which means the next one it probably should work. But I think more realistically, if you put more thought into it, there just seemed to be so much hedging apathy going into December. I think guys had a tough year, especially in the long-short space. They just wanted to get over the goal line, and I think the volatility, towards the end of the year, really caught a lot of guys flat. And I think once you've been burned. You're starting off a new year. I think people are like, well, we learned our lesson, at least for the short term, and are piling right back into protection. And, once again, maybe reflecting my view, but the kind of moves you're seeing in the 10-year, some of the stuff you're seeing in high yield, the uncertainty you mentioned with on this side of the pond with Brexit and obviously the stuff with China, there's a lot of stuff going on. So it doesn't surprise me that, especially given what we just came through in December, that people want, some volatility protection, and the VIX is a great instrument for that.
Yeah, we just came off. You're at a normal era where seasonality of VIX should kick in, and December not usually a hot volatility time, and yet we saw exactly the opposite of that last December when macro currents took the ball and ran with it, and those folks who were betting on the seasonal destruction of VIX were a little bit disappointed. So maybe some of that extending, you're right. There are a lot of known and unknowns, easy for me to say, lurking out there. So not surprising, maybe we get a little bit of bias. Of course, we have talked before, too, some of that upside paper we're seeing in VIX calls has been selling as well. So just because there's size OI open in the VIX upside doesn't mean people are loading up on all that. There has been a lot of selling. People are not at all reticent to crush some of those higher strikes in VIX as well. So we're seeing some interesting stuff out there. Let's see what we're seeing today out there. And I could mention not a lot lighten up the tape out there today in VIX options. The biggest trade actually looks like a 15,000 lot of what could be a strangle, maybe a risk reversal. It's a Feb 1645. Call it what you will. Looks like the puts going up for a couple of cents off the bid. So maybe a risk reversal, selling the puts, buying the calls, selling the Feb 16 puts, buying the calls, doing it 27 cents on the puts and about 12 cents on the calls. Those are all close to the offer there on the call. So it looks slightly biased towards putting it on as a bullish risk reversal, but again, might make more sense as a strangle. I don't know, selling those puts. Again, we just talked about not many people want to get in the puts, but those puts also, we see détente in that trade war. These puts could become relevant very quickly. So maybe selling that line isn't the most exciting thing for me, or the way I'd want to go. Interesting stuff here. I don't know, Ash, if you had to wager on this trade, this Feb 45-16, call it what you will. Do you think it went up as a risk reversal? Is there a way you would prefer it? Would you prefer it maybe as a strangle, buying both legs, maybe selling both legs? If you had to put on this Feb 45-16, is there a way you'd want to lean?
I think I'd rather sell it than buy it. That's a pretty extreme range. I mean, I guess A bunch of guys I talk to who trade vol kind of feel that gamma kind of repriced itself on the Christmas Eve move. And by that, I mean, I hate to make a definitive call on things are different now, but it does kind of feel like we're back into a higher vol regime where, I don't know if we're going to see a 45 VIX, but I'm not sure if we're going to see a 12 or 13 VIX anytime in the foreseeable future either. So I don't really sell strangles, but if I was to take one side of that trade, I would think, selling the 1645 strangle makes more pragmatic sense than buying it.
Yeah, you need obviously a big move to buy that thing and have it pay off. Interesting one, and again, this could be closing as well because there's a lot of OI on both of these strikes, so it could be closing. Again, one of the bigger ones we saw out there today. Other than that, looks like a nice mid-market call trade of March 30s going up as well, about almost 12,000 times. But again, not the hugest, not the most active day out there in VIX options. Like everyone's it seems like they're playing a little bit of the old wait and see game. Let's move on. Mr. Ash, you guys, our audience is certainly a big fan of trading these ETPs around VIX like VXX and others. Do these come on your radar? Can you trade them with your fund, or you primarily just use them as like an indicator?
We primarily just use them as an indicator. We pretty much stay more in the liquid stuff. Well, I mean, that's not fair. Those are liquid too. But, SPX, VIX, Euro stocks seems to be more of our focus.
Well, VXX taking another little bit of a turn to the downside, breaking through the 40 handle again. People are happy to see that. Unfortunately, for a lot of these size open positions, they've only got like a week or so left. So these Jan 10s puts we've been talking about forever out here, still over 200,000 open. Those seem like they're a bit of a bridge too far, shall we say? For it would be a historic move in VXX to go from about 40 to 10 in a week. Crazier things have happened in the world, but that would be a historic by just about any definition out there. These Jan 15s and 5 puts also seem like they are in danger of not exactly coming to fruition, to be euphemistic out there. Number 4, the Jan 33 puts. These seem like they may have the best chance here of the slew of puts that is still open out there in the big positions out there in VXX, and it is all puts. You have to go down to number 7 in the top 10 to really find the first sizable calls. The Jan 50s with about 51,000 of those. So we're in that weird environment now where we're not really threatening those anymore. So those have come off, and also the puts haven't gone down enough for the puts to become active as well. So interesting times here. It pretty much is. I'm looking at the top 20 actually here in VXX listeners, and it pretty much is a put palooza. It looks like these maybe Jan 40 puts. These are actually now a little bit in the money now. There's about 40,000 open there. So those of you who maybe moved up to some of the more aggressive put strikes when VXX rallied, maybe now is your time to take some of those bad boys off the table where you still have some favorable setups out there. Let's see what's trading out there in VXX land today. And again, not a huge day for VXX out there either. Like I mentioned, we're at about the 40 handle, about 4 or so handles below where we were a week ago. Coming into showtime is about 121,000 contracts on the tape, so not a huge day. The ADV is about 273,000, so not quite even half of the ADV yet on the tape coming into showtime. And what we saw was the biggest trade was about 5,000 of the Jan 39 puts printing on the offer for about 80 cents, but they were pretty tight, 79 at 80. So you can't really read too much into that execution, but 5,000 of them, it was not opening. There is size OI on that 39 strike. So maybe someone piling in for a little bit of a last minute wager on the downside with these puts, 80 cents, and you got some movement to make up for those bad boys. But they're probably looking a little bit better here today. But again, it's got to move. We got not much time left for these Jan contracts to come to fruition. Also seeing the Jan 59 calls, the other big trade of the day, about 2,500 of these going up. Looks like for 3 cents. Looks like someone maybe getting the heck out of Dodge while there still is a bid in these things, deciding 59, a bridge too far for them out there in VXX land. Ash, you mentioned some of the international European products like V stocks. You trade a lot of those out there. We don't really get the chance to talk about them much on the show. And if so, what's kind of been catching your eye out there in those products lately?
We trade Euro stocks probably more than just about anything else. They're liquid. The SKU profiles are somewhat similar to S&P, but they're not always correlated. For example, we were looking for some things a few weeks back, and from a SKU perspective, if you're buying SKU, it was actually more attractive in the European stuff than the S&P, right? So, it's a great way to express a view in volatility. just with a different index.
One of the issues people have hit us up before, whenever there's a crisis in Europe, we get asked a lot about, hey, I like VIX, I like the U.S.-based volatility products, but I want something with a little bit more European flavor, a little bit more European exposure. There's a couple, obviously. There's, VSTOXX is the one you're kind of talking about, the Euro stocks. The issue we always have with it is that it's kind of a number two in the vol space, but it's such a distant number two. People going to it looking for the same liquidity, the same depth you can get out there in a product like VIX, which has hundreds of thousands open on all of the major strikes. Euro stocks, VSTOXX. I'm looking at try to see if I can get some volume out here. I'm not seeing the volume on this. I'll have to dig a little bit, but it's always been an issue for people who go out there. Is that something you're encountering as well, or is that maybe improving out there? More people are starting to discover the volatility space. Is it maybe easier to get some trades done in VSTOXX now, AASH, than it was maybe a year or two ago?
I think so, but I think your overall premise is still correct. I mean, that is the reason that I'm here, and that is the reason that my focus is primarily U.S., because we do emphasize liquidity, and the U.S. S&P products are still top dog.
Yeah, I've talked to some of the Eurex folks and others out there over the past about trying to make VSTOXX more of a just relevant for the U.S. audience and for others. And for whatever reason, they seem to content to let it do its own thing and grow on its own. And which is, I guess that's an approach to take. But so far, it's not catching up. And there's a lot of interest in the volatility space right now. People looking for a new product to trade out there. We've had a bunch of them on the show over the past year or so. New competitors, new entrants to the volatility space. So there is room for VSTOXX, I think, to grow its market share and indeed its mind share and its volume. And yet, for whatever reason, it does not seem to be happening out there. What about you mentioned S&P, but obviously there's other U.S. vol. There's obviously NASDAQ's been very volatile as well. Even things like the Russell and our old friend RVX, which is more of an abstract index now, but still interesting to watch. Are there other aspects of U.S. volatility that really attract you, or are you guys locked down to S&P vol?
No, we're not locked down. I mean, we look at some of the single stock vol as well, but for it to resonate with us, generally, certain listings have more developed option curves than others, right? So, for example, we pay pretty close attention to volatility in the FANG names, which I think a lot of people do, and so something like a Netflix or something like Apple. We're definitely paying attention, especially because there's catalysts. Obviously Netflix has earnings next week. There are some interesting opportunities in U.S. single stock volatility as well.
Oh, so you can come in and maybe put on some vol in a Netflix with your fund as well.
Absolutely, yeah. I mean, for the most part, I concentrate on the index stuff because it's easier to keep track of. But absolutely, if you see something compelling, we see something compelling in a single stock name, we do look at it and put it on.
I like that's a pretty broad mandate for you. A lot of the guys I talk to who have vol funds, they're very locked to, let's say, VIX futures, or just S&P volatility. So it's nice that you have a broad mandate. You can kind of, because you're right, the vol moves, right? It goes from one area to another. And like right now, for example, if you're just locked to the VIX futures, you're kind of sitting on your hands. Not a lot going on out there, right? It's nice if you could look a little further afield, maybe do some single stock volatility, or maybe you do the VSTOXX VIX spread, if that attracts you. Is that another area you mentioned VSTOXX, but a lot of people I know like to trade them when they get a little bit disassociated, right? We're seeing VSTOXX right now at about a 17.5 versus, like I said, the VIX cash coming into showtime around a 19 or so. So you're talking about a 1.5 or so difference between the two. Is that an area you like to trade, the spread between the VSTOXX and the VIX, or do you mostly like to trade them independently of each other?
Mainly independently. I mean, the dispersion stuff, it does work, but I think you kind of have to focus on it. And those opportunities seem to come when they come. I think we're more focused on the individual components themselves.
See how earnings season approaching again. Maybe that'll be an interesting time for you guys over there. It's interesting to have a German volatility fund trading volatility of U.S. earnings. I like that. It's a whole new world out there, Ash.
Well, the thing about Europe is, they definitely want exposure to volatility. They definitely want liquidity, and I'm starting to get to know people here that a lot of German funds are, focused on whether they do dispersion. On U.S. indices and single stock names, there's actually a bigger market in Europe than I would have thought.
Yeah, we always hear the old saw is that, oh, Europe's all about the warrants, right? And all those other things we don't really trade here. But, if you want to sink your teeth into some volatility trading over there in Europe, you kind of have to look here. This is still where the big dog is from a volatility products and, of course, the index vol, and indeed even the single name vol. Even though there are some pockets springing up, and certainly there's a huge community of volatility traders in places like Frankfurt and indeed all over France. France, for whatever reason, remains a hotbed of volatility trading. I never really understood why that is. France in particular just has such a cachet with the volatility space. But you're right, the products-wise, it still is primarily here in the U.S. So I know we have some listeners who want to get at us too. We have some polls to pay off and stuff. But before we do that, Ash, any other topics that are coming to your mind for you from a volatility perspective? Any things that are kind of top of mind for your fund? Or maybe, I know you're the king of dubious correlations. Any interesting dubious correlations for our audience here before we answer some questions?
I haven't had a chance to update those, but I will for next time. Just that, it does seem that Powell did a 180. We seem to have a Powell put in place. And, now we're possibly concentrating on earnings. I think earnings season starts to get more intense next week. And then we have, the geopolitical knowns and unknowns with Brexit and China. So, I think it's a great time to be trading volatility. Through some of these indices or single stocks, whatever you prefer. But, and finally, people may differ on this, but, I do think that we reached a bear market in both S&P and Euro stocks last year, towards the end of last year. And if you study market history about bear markets, people look at this incredible rally we've had year to date. Well, bear market rallies are more violent than bull market rallies, right? And typically if an initial bear market rally is about 8 to 12%, and that was kind of where we're right in the middle of that. So I'm talking my view, but I don't think we're necessarily out of the woods yet, and I think we have a lot of potential catalysts on the horizon. So it's a good time to be looking at volatility to help your portfolio.
Interesting. Well, you are the data guy. So, 8 to 10%, that is, of course, the big question out there right now with the broad array of the audience, right? Is this just, the proverbial dead cat bounce before we continue to the downside, or is there some actual, meat to this rally? Of course, so much of it right now, we're in this very strange macro-driven environment right now where so much is literally up in the air. We don't know what's happening with the Chinese deals. We don't know what's happening really with the government shutdown. So there's a lot. It's somewhat unprecedented. I can't remember the last time we were locked in a trade war with a massive partner and also had a government shutdown going on while these market sell-offs were occurring. So we're somewhat unprecedented from that perspective. But yeah, you're right. We have seen these interesting data points before. Remind me next time, Ash, you're on, by the way. I have to make sure you get us some of those dubious correlations. Those are some of my favorite. If you haven't seen some of Ash's presentations from events like the Risk Management Conference, listeners, I encourage you, if they're still up, to go head on over to those websites and search for him, Ash VYAS, VYAS, and see some of his charts on the Steam. What were some of the ones you had? The Steam deaths versus Miss America pageant winners in Maine? Yeah, crazy things like that.
The rate of divorce in a certain state relative to the amount of butter consumption.
Yes. Right. those are some of my favorite. In a somewhat, shall we say, a somewhat staid event like an RMC, to have graphs and charts like that going up on stage was always a highlight for me. And hopefully you guys are going to be a highlight for us with some of your questions. So let's get to a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol Voicemail. This is where you guys have your chance to get at us. If you haven't done so yet, head on over at Options, or if you're listening live, hit us up in the chat as well. We got a bunch of them here to get to. Let's just run down a few of them here. JLVC asking, this is actually going for you, Ash, because you haven't had a chance to weigh in yet. The rest of us mostly have. He wants to know, what's the Vol crew predicting for 2019? Well, we talked about that a lot, at least on our recent shows, about, of course, our overall predictions for 2019, as well as some of our thoughts on the ranges that VIX might have. So check out particularly the crystal ball segment from last week's show or 2 weeks ago, where we had extensive topics and discussions on both of those. But this is a good chance, Ash, I'll be charitable to you. Usually we had our poll close, I think a week or two ago now, so everyone had to get their votes in already. But, you're just coming on this week, so I'll be nice. It's a new year. I'll be a charitable fellow. If you would like to play along in our big crystal ball contest for 2019, and many people have, the 2 categories we need from you, sir, are, 1, where do you think VIX cash, just the cash, will close at the end of the year, so December 31st, 2019, as well as, of course, some listeners added an extra caveat, which I think is kind of fun as well. What do we also think the average VIX will be throughout the course of the year based on close? So if you want to have a guess for one of both of those, have at it, and I will enter you in our contest, sir.
I'll just try to answer the first one. I think it'll close at 22 at the end of 19.
22 even.
Yeah, 22 even.
Okay. That's interesting. That kind of is in line with a lot of our audience. We gave them also ranges that they could play along with as well in our poll question. And one of the ranges was above 23, and that actually had a fair amount of the percentage of the vote, I believe. So people are expecting a more volatile year. Maybe some of that is just recency bias. They've seen a lot of vol recently, so they expect more of that going forward. But there was not as many people as you might think. Only 2% picked kind of the return to 2017 levels, Ash, of like the 8 to 12 range. So no one was feeling that. Everyone was feeling more of the more elevated ranges than you might typically see. All right, so close. I'll make sure you're entered in our contest, sir. The prizes are only for the listeners, but you get pride of place if you come in on this one. By the way, to win, listeners and Ash, you have to be, of course, within a handle. There's no closest overall. If no one's within a handle, guess what? No winners, because you got to have some sort of expectation of accuracy. If we just open it up to the masses and just say pick whatever, things get crazy. So there you go, JLVC. We got Ash to play along for your predictions. We'll try to maybe get a few more too. We'll be charitable. Let's more. A lot of friends of the show have already weighed in. We'll get a few more weighing in so they can play along as well. All right, JT here asking here similar kind of question. He wants to know, are there any New Year's resolutions for vol traders? I think you're asking, do we want you guys? What resolutions do we think you should have? Okay, I'll go that way. I think Ash kind of touched on it earlier, and we've kind of touched on the show a lot. We just talked about the open interest in things like VXX. There is such a remarkable short vol bias. We know that a lot of you out there have it. You all use products like VXX to fade that vol. Last year, of course, ironically being one of the only year actually in VXX history where it actually closed up for size. So that inverse vol trade didn't exactly play out throughout the course of 2017. So Ash remarked that, maybe coming into 2019, we maybe are in a new vol regime. And again, these periods or these inflection points are kind of difficult to nail down sometimes, so it's hard to say with any degree of certainty. But it does, the futures, where we're saying right now, it's very flat. Everything does appear to be saying, it's kind of a bit of an uncertain time right now, and our poll results certainly speak to people leaning towards a bit of a higher bias. A lot of our listeners and our friends of the show weighing in have been in that low 20s to mid 20s range as well for where they think VIX will be at the end of the year. So there are a lot of indicators out there that are maybe pointing to a higher, more volatile period. And again, volatility can still be mean reverting, but still take a long time to revert. So we could be vacillating in this mid to low 20s and high teens range for a long time before, if it does indeed revert back down to the mid to low teens, it's going to take some time. I think that would be my resolution for a lot of the audience out there, is to maybe consider that volatility regimes can change. Just because if the trade war ends, I think vol will come in, but doesn't mean we're going to immediately go back to 2017 VIX of 9. So if you are out there wagering heavily on that, maybe just have that caveat in your back pocket. We talked about it a lot on this show, products like VXX and others, how to trade them favoring the downside, but also being prepared for the upside. That's a way, I think, if you want to lean that bias, that's a way you have to proceed. If you have a New Year's resolution for yourself, from a vol perspective, not to lose weight or anything, but from a pure vol trading perspective, Ash, or maybe for our audience, have at it, sir.
I think, you touched on it. Given this level of uncertainty and a lot of the unknown unknowns, and the chance that we might be back, I wouldn't say a new vol regime, maybe back to the future, Mark. Back in the day when we were both on the floor of the SIBO and we thought buying VIX at 20 was a steal. Right, if you can remember that far back.
The dark old days, but yes.
I think the key to it is, be disciplined with your units and consistent with your units, because these VIX calls, they don't work often, but when they do, nothing works like them, right? So it's one of these things where stay the course and be disciplined, and I think there's a decent chance we're going to see further volatility in 2019.
Yeah, you're right. The VIX calls, the P&L graph on those things, if you take out those crazy aberrant moments, it's terrible. They lose money 99.9% of the time. But you add in those moments, the Febocalypse, the October moments, and things like that, then they blow the doors off most things in those environments. So I've said it before many times, playing VIX calls particularly is a bit of a table stakes game. You got to manage your stakes until you get it in those environments, and you got to load up when you have that good hand, right? And so that's kind of the challenge out there, is managing that erosion, managing that table stakes with that exposure until the day comes. And again, that's many shows we've discussed that. That's a whole many-hour conversation again in and of itself, but an interesting one nonetheless. So yeah, it sounds like a lot of us here are thinking maybe, again, there's no guarantees, but maybe we're seeing a little bit of a different vol. 2017 certainly was a different vol regime, and it was all to the downside. Maybe this time, not so much. We got a lot of questions on this theme here. Tan wants to know, is the short vol / VIX trade dead? Should we all just buy VIX or VXX calls? I don't think we've ever said that. I don't think we've all said, hey, load up all upside all the time. I think it's just more of a be cognizant of the fact that we could have some more periods of sustained upside. If you're going to put on the upside, though, you got to do it in a smart way. We've talked about that before. Some people like that short 1 by 2, sell 1 near the at the money, buy 2 somewhat out of the money, or some people go crazy with it. They buy 3 or 6 and they make them really wide. I've expressed my views on those crazy ones before. Not a huge fan, but the nearer term, more modest ones, I think there's a use case for them. It has to be the right environment for a setup on those. I don't think we're quite there yet, but that's a way to do it. If you want a little bit more favorable way to go, I don't know, Ash, when you're looking at getting long a little bit of volatility, a little bit of VIX, do you have a preferred MO to do it? Do you like just maybe straight up verticals? Do you like doing funky ratios, risk reversals? What is your long vol trade of choice if you have to go that way, sir?
It depends on a couple of things. I try to keep it as simple as possible, sometimes just a call, but sometimes if you're in backwardization, or you're not necessarily going to get an up and out, you're not necessarily going to get the opportunity to buy the calendar across expiries because the term structure is not cooperating. Like in current markets, you might be better doing a back spread because you're in backwardization instead of contango, if that makes sense. So there's only probably 2 or 3 things that we do. We don't we try to do what's appropriate for the term structure and skew, but I don't think there's a one size fit all.
Well, I guess that's a good thing for us, because if there was a one size fits all, it would be a very boring, very quick show. Would not have been running for many years and getting a lot of great content out of it. So I guess for us, that's a good thing. But yeah, there are many ways to do that bias. The risk reversal is another way. If you like that, with maybe a put spread to the downside, if you're concerned about the gas coming out of the volatility balloon, but it also finances your upside a little bit there. There's a lot of great ways to manage that table stakes while you're waiting for these, or if you think that explosion is coming on, if you still bias to the downside, then go for it. You don't have to go with the upside. But I don't think anyone here said, Tan, that we should just go out and load up on all VIX upside. That road leads to dark things if it's not done well. E5L4, more of a comment here. He says, not looking good for those 200,000 Jan 10 puts in VXX. No, it is not. We just touched on that earlier. Those look like they're going the way of the dodo. 200, I think 10,000 or something open out there right now. About half of them owned by Mr. Meatball and the Carmen Line Fund. He says he got paid pretty well to put them on, so he didn't really lose a lot on those. More of a fun trade, I think, than anything else. Something to talk about. He was paying, so we have something to talk about here on the show. So that was very nice, very generous of him. Let's see, got time for a couple more here. We got so many questions. You guys have been on the volatility ball of late here. L-Rock3 wants to know, is there an update on the Spikes launch? If you recall, listeners, we had the guys from T3 and MIAX on our interview show, and also we had Shelly from MIAX on our VolView show not too long ago, talking about that product, that Spikes. If you're not familiar with it, I encourage you to check out those, but in a nutshell, it's not quite the same, because obviously it can't be the same. VIX is protected, but it's a very similar methodology to VIX, just applied to SPY options, which is obviously a much more easily, readily accessible product than, for a lot of people, than SPX. So, and also they've done some things to try to take into account and factor in the issues that seem to be plaguing VIX right now, which has to do with the skew and the special opening rotation and charges and allegations of manipulation going on therein. So they're trying to deal with that as well. They got approval by the SEC back in October, which is the reason they were on the show back then. Since then, I haven't heard I'm looking right now, actually, as we're talking, I don't see any new concrete announcements on here's a effective launch date. And the issue, I think, still is, and I want to ask those guys directly next time I talk to them, I think the issue there still is they need really an underlying to do. I mean, you could technically do it with a basket of SPY, that's a kind of cumbersome way to do it. This is designed to be retail friendly. Having them have to hedge or use a basket of SPY against it is not exactly a retail-friendly way to do it. So I think they need an underlying. I think that's probably what's tying things up right now. But long story short, I have not heard of an update, but hopefully maybe we'll hear something soon. Again, I'm intrigued. I like talking VIX and everything else, but I also would like to talk more products in that space. That's why I'd like to see V stocks do better. I'd like to see things like spikes take off, and maybe the nation share stuff, the VOLDEX and the SKUDEX. Of course, our old friends at VOLEX now demand derivatives and their realized volatility. I wish they all would take off, because more choice out there is better for everyone, right? So I'd love to see all these products take off, get a decent market share, a decent mind share, and we could talk about them here on the show. It would be a good thing for everyone. Speaking of a good thing for everyone, it is time for us to go into the crystal ball, which may or may not be a good thing for us, but always is good for you because you get some fun out of it at the very least. All right, let's keep on rolling to the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we break down what the heck we're expecting for the week to come. We also pay off our bets from last week, and last week we were talking, I think it was the meatball, and I might have been the rock lobster. It's hard to keep track sometimes, but I think it was the meatball. We were prognosticating. He was fading the vol pretty aggressively coming into today. I was fading it, but a little bit less so, and that seemed to be the winner for the day. Right now, coming into the end of showtime here, we're seeing VIX cash hovering around 19, about an 1890 or so. I was at 19 and a quarter, so not quite a bullseye, but pretty darn close there. Mr. Meatball was at around 17 and a half, so he was about a point and a half away out there. So I will take the V. People ask us if we should track these more. I don't think I'm going to keep a little spreadsheet. I will put a V next to myself for Victor. It's pretty good. You get it within 0.1 is really what I consider to be the bullseye. But this is pretty close, all things withstanding. But that usually AASH means I get to go first for our picking the VIX for the week to come. But I'm a charitable guy. I'm a generous guy. I will open the door up to you as the guest. Would you like to pick first, sir? Or would you like me to pick first and you go second?
Go ahead.
How did I know you were going to say that? Okay, fine. I will go first. By the way, the challenge we're doing here, Ash, is to try to pick VIX, not the close, but where it's going to be at the end of the show next week. So exactly this time a week from now, about 1 p.m. Central, which makes it a little bit more daunting, a little bit more challenging. Like I said, we're coming in right around 1890 or so in VIX cash here to the end of showtime. I faded it a bit. I faded it about 3, almost 4 handles last week, and it worked out pretty well. I'm not going to fade it as aggressively this week, but I might be, again, we're in that weird regime where I think there might be still some other shoes to drop out there. You might see a little bit more sell-off, so I'm not going to go. Quite frankly, I hate to do this because Meatball does this all the time, and I give him a hard time for it, but I kind of like where I am right now for next week as well. So I'm going to do that. I'm going to pull a 19 and a quarter, same pick for this time next week. I think we're going to vacillate around a little bit, but I think we're going to be pretty much close to here a week from now. Mr. Ash, what are you feeling, sir? Upside, downside, middle? What's your spidey sense telling you for this time next week?
Well, I think the market's the great accumulator, and the best way to suck the most people in is to have a nice little rally up 2 or 3% in the S&P through the end of next week. Get everybody optimistic, and then the shenanigans can start in February again. So I think we're going to be right around 17.5 this time next week. Interesting.
I would not look askance at that. That's if I was going my normal way, that's probably the way I would go. But I'm mixing things up a little bit here in the crystal ball to kick off the new year. All right, everybody. Unfortunately, that music means we've come to the end of another epic sojourn through the world of volatility, and oh, what a sojourn it was. Ash, I'm glad to have you on the show. It's kind of fun to talk a little bit of European perspective on volatility and what they're trading over here, U.S. volatility in particular, and how things are going. But before we go, Ash, if you want to maybe let our listeners know about what you guys have up to, I should say, over there in the Tungsten Fund, or maybe if people want to learn more about what you guys are doing, where should they go? What should they do, sir?
Well, Tungsten is a multi-strat investment management firm. We offer products in UCITS format, which are basically European versions of U.S. mutual funds. We have a managed futures strategy, we have a risk parity strategy, and the volatility strategy, which I manage. So that's who we are, that's what we do, and there's a fair amount of derivatives experience here, and that's our focus.
There you go. And if people want to learn more, sir, where should they go? What should they do?
Go to tungstenfunds.com. The name of the firm is actually Tungsten Capital Management.
There you go. Tungstenfunds.com. Check out Tungsten Capital Management. Check out Ash and his broad volatility purview, which is kind of fun. Ash, it was great having you back on the network. We'll definitely have to do this again soon. It's always fun to have different perspectives join us here on the Volatility Views program. I'm getting an update from our producer here that there is some news maybe that Spikes is targeting a January 22nd launch now, but it's actually been delayed by the SEC shutdown. You know, we're in the middle of a government shutdown right now, so SEC can't really do much. So maybe that's delaying a little bit. So maybe there is some hope for a near-term launch of January 22nd. So keep those fingers crossed, listeners out there. And I forgot the name of the listener who asked that question. Let me pull it up really quickly so he gets his due credit. LRock3. Yeah, so look for Jan 22nd, LRock3. Hopefully we'll see. Maybe spikes get listed by then, and then hopefully we'll see some of these things start to come to fruition. And on behalf of Ash, and even though they couldn't join us, the Meatball and the Rock Lobster, and myself, I thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live, all the fun stuff that you do. And we'll see you back here next week for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.